Hi, this is Richard here on Friday the 29th of October, and this is a chart of the ASX 200 or the SPY, and what we can see is that we've got significant resistance that's still in place on this gently sloping channel, and we haven't yet confirmed that this is in fact wave 2 to begin wave 3 because we're waiting on further indication from the Bernanke speech next week with regard to quantitative easing and what that will mean in terms of the money they're going to print. But also there's a midterm election on as well, which I think that's on the Tuesday and Bernanke's on the Wednesday. So 4745 is the resistance target. I wouldn't be surprised if we did get a spike up here. That certainly would mean the Dow would go slightly higher. But needless to say, this is a long distribution pattern here, and often you could actually argue the case that this is a base that's forming accumulation. When you get these long sideways patterns, accumulation would mean that in fact we're going to get a break to the upside. However, I'm not promoting that because of the weak advanced decline ratio, the lagging volume, and a range of other indicators which suggest that there's some downside activity more than likely. But on the Dow, what we can see is that it looks slightly different. Of course, it's made this creeping up trend, and you can see the double top high that's currently in place. It doesn't mean it's going to survive, but certainly within a couple of points it has printed a double top at this point. In the event that we got a significant breakdown here, then the target would be let's say 10,700. The S&P 500 and the Dow often actually retrace towards the 50%, which is 10,550 odd. So in the event that we had a little pullback or no pullback and a rise higher, then the target would be that 11,400 mark, and possibly higher at 11,600. This is significant because of the April 26 high. This was always perceived as being the end of the recovery rally from March 2009, and of course it did break down very heavily. We had the flash crash, and I think it's important to note that in the event that we don't get further highs and the market becomes bearish for whatever news that's out there, then the possibility of a very steep and significant drop is very much on the cards. And as we've talked about many times before, this is in fact a triple zigzag pattern. There is this rising trend line coming back from sort of I think it was late August, or rather just late 2008, and it's held as resistance, and now we've printed this double top here. So again, Bernanke's speech and the midterm elections are going to be important to determine ongoing direction. Here is gold, and you can see the support that has been found off this rising trend line. It came down very clearly, popped down in 5 waves. It's come up in this sort of ABC, so I would expect an upside target towards $1,350 to $60. We've had a cross down here on the long-term or slow-moving stochastic, so I would expect that to retest, and then we'll know whether or not we're going to break down for further lows. And in the event that we do, then I think it's fair that we could project off the high down to the low, and we would talk about either the long term, this is the weekly the weekly long-term moving average, connecting with the 1.618 at 1,230 to 40 odd dollars. $1,240 would be a reasonable target in the event that we get a significant breakdown there. But let's wait and see. It could be a bit higher actually if I readjust that, and I actually don't think I can. No, I can't. So let's see whether that unfolds, but at the meantime this support is really the important telltale as to whether or not this trend is going to continue on upwards. This is a chart of Amazon, of course the book reseller amongst other things in the US. I just wanted to show you how clear the 5-wave pattern was from the low back here in March 2006, which is prior to the GFC, obviously, it actually pushed up and then retraced through the GFC and post-GFC to mid-August 2009 down to this low as a huge ABC. So that's the correctional leg, and then we've come up in this impulsive fashion here in a wave 3 and completed the wave 3. There's actually 5 waves in these, 1, 2, 3, 4 and 5, and then it's come back in another ABC and then pushed up in 5 smaller waves, 1, 2, 3, 4 and completing for 5. I think the target for this is actually $178. Clearly, you know, we haven't been trading these US stocks, but it really is the bellwether at the moment with respect to what the broader indices are doing. So in the event that we see that break down, certainly the 5 waves is all but complete here, and you know, it doesn't need to go any higher to validate the pattern. It's done, but we would expect, you know, quite a savage move to the downside in the event that that was the case. Here is materials on the Australian market. This is the industry sector, and again, I just wanted to show the double, triple top activity that's going on here, and certainly this could push up and touch or even slightly go through at 13,400. But if that is the case, then, you know, really that's 5 wave complete too. So, you know, the potential is for you know, quite a significant pullback to occur at that, and certainly you can see in April, from April 26, which we considered as the end wave 2 of the recovery rally, you can see how savage that was. Over 3,000 points wiped off the materials sector before we got this very complex overlapping correction here, which is all but complete now. This is the financials, and you can see it's a very different pattern. There's the double top, there's the breakdown earlier this year from that end of the recovery rally, again very savage, and we've had this triangle, this 3-wave affair triangle, which looks like it could push up a little bit higher, but yet it doesn't have to in order to complete in the event that we go into bearish activity. So that's the financial sector, and finally is the volatility, the VIX, which is based on the Chicago Board of Options, CBOE. You know, it spiked up overnight over this 20 moving average, and usually when you get a spike up like that and a pullback, a retest, then, you know, we'd be looking for higher activity. Higher volatility means lower indices prices, and you can see that that's the April spike in the volatility, which is not record because that occurred during the GFC, but it's not far off it. You know, quite savage move up, and it happens very, very quickly. This big candle up on that day over this this breakthrough of the 20 moving average, pullback, retest, and off it goes. So I'm not saying that that is going to happen just now, but certainly we'll be on the watch out for it in the event that we get a breakthrough this sort of descending channel there. So that's it. For more information and charts, please go to themarketforecaster.com.au, and we'll talk to you soon.